Today is Friday, June 20th, 2025, and I think it was a pretty decent week for me. So today I was up about 0.5%, and the past week I was up about 5%. Past month it is about 13 and a half. Year to date, almost 45% on the year. And of course, year over year, I am up 148%. Slightly disappointing though, because I think Robinhood was actually up like 200 something percent over the year. So I should be up more than that, but it is what it is. But QQQ is actually down today. And then for the week, it's basically flat, but up 0.6%. And then of course, year to date, it's only up 2.5%. So I am tremendously outperforming the NASDAQ and most likely outperforming the S&P and the Dow as well. But if we take a look at my transactions, I want to say we left off. I actually don't remember where we left off, but I did close that Robinhood covered call. I think I showed that in the last video. And then, of course, I bought some more VFC. It did not turn out the way that I expected. The VFC just continuously goes down. And the main reason why I'm in it is because I am a Vans fanboy. I will admit it. But I also do think that consumer stocks like Nike, etc., they will eventually turn around. So I'm just slowly positioning for it. But of course, I did take a loss on that QQQ called credit spread. Pretty sure I showed that in the last video. But the biggest move I made this week was actually cashing out of TLT. Why did I decide to sell TLT? It was for a variety of different reasons. I did see a potential, right? I did see a potential for rate cuts. I thought rates were going to get cut. Most likely, they will still get cut next year, 2026, because that's also around the time frame where I think the market is going to be struggling a bit. And these next few years probably won't look like 2023 into 2025, that huge rally that we've had, not just in the market, but in a lot of individual stocks like Palantir, Robinhood. I don't think the next 2 years are going to look like that. So most likely rates will be cut and TLT will start to catch a bounce, right? Very slowly. But the main reason why I sold it is because I'm pretty much tired of it. And this is probably the time that TLT will actually start going up, because now, I've pretty much thrown in the towel and I've given up. So this is probably the buy signal. But I just don't really like how TLT has been acting. Usually people would say, if CPI is like in the 2s, and I think trueflation, it is in the 2s, then rates will get cut, but that hasn't happened. Okay, and then flight to safety, whenever the market goes down, TLT has also been going down, which is kind of weird. But everybody's already known that. But why recently did I sell? So the main reason was because of how it reacted with the current situation with Iran and Israel. So usually when there's like global conflict and global uncertainty, people will go into treasuries, and it kind of did, right? It like went up a couple percentages, but we didn't get that huge bounce. Just overall thinking about what it would take to get rates cut, or just rates to go down in general, it would take a lot, because if you think about it, the government is printing money like crazy, right? The huge deficits, and which is the main reason why rates are so high, because people just don't trust treasuries anymore. So we got that going for us. The current behavior of treasuries, it's not really acting like a risk off. The 60-40 portfolio, blah, blah, blah. All of that is just thrown out. So in order to get TLT to actually go up, it would take a huge recession. It would take huge cuts to government spending, which would also cause a recession. So even though, I do see a potential for TLT to go up like maybe 20%, right? Let's say 2026, it goes down, the market goes down, and TLT pops 20%. Was it really worth me bag holding and just continuously holding treasuries? So that was pretty much my thought process. I have been bag holding TLT for years, but basically I just wanted to cut all my losses, not think about it anymore, and just put that money into something else. But I did go ahead and buy some more REPX. I did get my very small Google dividend. I did have to pay my Robinhood interest. And of course, the one event contract that I did have just to participate in it and test out the Robinhood features, whatever. Of course, I took a loss on that, but it's only like 15 cents or something. I got my EA dividend, I got my VFC dividend, and then I have some more upcoming dividends. So if we take a look at where my portfolio is at right now, I do still have my covered calls on Palantir, which are probably deep in the red right now, because Palantir, I believe, is at 140. If we take a look at the last price, yeah, so Palantir, right now it's at 137, but it did tag 140. So my two covered calls on Palantir are deep in the red, but like I said, it's just a hedge, and it's just a way for me to cash out some of my profits without completely cashing out of the stock. So who knows, I might roll it out or roll it down even more just to collect even more premium, cash out even more profits. But I do also still have the Nike cash secured put, which is also probably still deep in the red. But if we take a look at my current updated portfolio, Robinhood is still, once again, my number one stock, over 650% gains. Nike, I'm still down 20%, still my number two. Palantir, almost 680% gains, still my number three. Pepsi, I'm still down 17.5%. RPX, it's a slight loss, only 3% loss, and it's my number 5 position. And after that, we have Honest, SoFi, which I'm up 100% on, PayPal, American Express, which I'm also up 100% on, and then of course Burberry. And if we take a look at my equity now, it is well over 100K in Robinhood. And then the rest of my portfolio pretty much is just baby numbers.